Is the quality good? Working? Alrighty. So the first thing that let me think of what you guys asked. It was pretty much drawing them. So can you guys just spit out? I just want to trade like just like 4 tickers. I'll just draw the brown informations. I'll use the daily. Just give an example first. Okay, Tesla. Oh, this is a good one. So this is kind of the process. We're gonna go up to the weekly just so I don't have to draw as many pivots. So first of all, the reason we know that these brown informations exist is because, let me get the numbers up on here. All right, so see the numbers here. So the reason we know brown informations exist is because these 3 candles exist, and they're an outside bar of the previous bar, meaning we took out the high and the low. And that is by definition a brown information because oops, because this high higher than this low, or higher than that high, and this low is lower than the previous low. And that's all broadening information is. So knowing that, knowing that price takes out both sides of a range, that is what broadening formations are used for because it lets us gauge where price is going to be going. And the way you do that is, so for Tesla, if we're looking short, this was like, I think it was, yeah, so 2-2 month. So if we're looking to go short on the weekly, the first thing we're going to do is we're going to mark out all the pivots. So let's say we're looking to get short from this 312. We mark out all of the pivots all the way down. And this will make sense in a second. And today has been absolutely insane. Yes, it has. So the reason we do this is because this is so let me change the color on this. So this is a high of the previous range. And then these are lows of the previous range. So we took out the high and we put in a new swing high. And now we're going to come out and take out the lows. And the reason that we do it like this is because since we took out, you can see right here, we barely took this out. So that's a slight lower low to this. And then when you get a reversal after taking that out, now you know exactly what your range is. And let me just kind of clear this off a bit so it's less confusing. So this is going to be the high, and then this was the low we took out right here. So now we have a new high. You could just say that this was the previous range. So we have a new high right here, and now we have a new low in comparison to this low. So the way that you draw this, if you're looking to go along with time frame continuity, obviously, is that this would be the bottom of the broadening formation, and then this would be the top of it. And the broadening formation, it's kind of a visual just to see that the range is broadening. But the real way that you use it is just understanding that it happens and using these pivots because you're always looking to create these compound outside bars. And that's all a broadening formation is because if you look right here, so if this is new high to this, everything from here all the way down to here, this is all a compound outside bar or an outside bar on a higher time frame compared to all of these candles here. And that is how we get the targets on our reversals and continuations. So if we go up to the monthly, you can see we had this 2-2 reversal, right? So the magnitude, which this is a perfect example. And then magnitude is another way of saying target. It's just we say magnitude because that's where we expect it to go, and then everything after that is a target because it's like extra. So when we get this 2-2 reversal here, our magnitude is to take out this. And if you saw, we took it out by 40 cents and then got it reversal back up. It doesn't always do that. Sometimes it'll go a little lower, but we'll kind of ignore that for now. So we had this 2-2 on the month, and that would be active right here, and our target's to take out this. Why is that our target? Because now this bar and this bar are an outside bar. Oh, well, this bar, and this bar are an outside bar of this one, meaning that this is the broadening formation. And obviously it's going to look weird to draw it on the higher time frame, but it'd be this and this. And let me go to Disney now. This one is great. This one has tons of broadening formations all over it. This is a nice little trick on TOS. Chart on each chart. Trend line. Yeah, I know. I'm just lazy, and that thing, when I add it to my charts, it gets saved and it goes across on all of my charts, if that makes sense. And then it just gets really annoying, so I never do it because it kind of blocks up here. But yes, thank you. So it has tons. We'll go down to the daily. And this is a perfect example of how we use the broadening formations. So we have the swing high and the swing low. We take out the high and we get the reversal on the daily. Well, we could look at the weekly. So take out the high and then we get the 2 to reversal down. 2, inside bar shooter, boom, 2. Take out that low from the daily. And now we get the reversal back up. And this, see how our range gets bigger and we come back through it. And we're only supposed to take out this, and then that was the magnitude. And then we take out more and we have this expansion of the range. Can you middle click with mouse to bring up drawing tools? Works best. Oh, dude, that's awesome. Okay, thank you so much. So let me just go to the daily. Yeah. And obviously, we're not going to go and not going to take out everything every single time, even though that's the goal. And the way that you get around that is you mark out all these pivots on the way down that haven't been taken out. And the reason that works is because when you have all these obvious pivots, people are going to have their stops there. And when you have people's stops there, it creates an order vacuum, meaning if everyone sells right under here, there's no, and then someone goes to buy, there's no orders on the way back up to fill them. So it's going to come shooting back through, and you can see where you get this huge day right after, and it comes dripping back through the range. And then when you're coming back through, people's stops are here, 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 and then high. So it just rips back through even faster. And that's the most important thing to understand. You want to be trading back through these ranges. And then hopefully this is how you would draw it. So high, high. Oop. So take that out. So we took this out, get the reversal. Now we know that this is the top of our broadening formation. And now we're looking to take out that low, get the reversal. Now we know this is the bottom. And our target would be to go and either hit the top. Hit the top would be like the second target. Magnitude would just be take out this high right here. And then you can see how the range just continues getting bigger. And if we get this huge sell-off, I don't doubt that it's going to do this. So now this is our swing high, this is our swing low. And then we come up here, this is our swing high, and this is still our swing low. So when we come back through here, we're going to rip all the way down through here and stop everyone out that's long against all of these pivots right here. And then I don't know if there's any other tickers. Yeah. So, and then hopefully that clicks. The next one we're going to go to is ES today on the hourly chart. So this is where it kind of comes into fruition, if that makes sense. So real trade from today. I didn't take it. I wasn't really trading much today, but you mark out all these pivots and you see this is kind of what a pivot machine gun looks like. It's where you have all these pivots really close together. And all the people short in here they're going to have their stops up here. So now we come rip all the way back through. And you can see how we have this huge candle. And then this is our next target. This is our next target. Boom. Now we get the 3, 2 up, starts coming red and coming back through. What do we know about threes? This is a broadening formation on a lower time frame. So, oops. Sorry, my 15 minutes kind of too many days. All right. So on the 15 minute, that was the hourly where we had the 3 and then the 3. On the 15 minute, this was the smaller broadening formation from those threes. So we get that 2, and I'm going to go back to the hourly. So we get this 2 up, break the high of this 3. So that's the high broadening formation. Now we made a new high. And then we start coming back in. And we want to be trading back through previous range. And we know price takes out both sides of the range. So the second you see this start happening, you could either get short right here. You don't have time continuity yet because the day is still green. But the magnitude of this move is to go and take out the bottom of that 3. And then boom, we did it. And then it tried to come back up through. Nope. And then we get this expansion down. And that's where we had all these other targets that I had. You can look back in the Discord. These were all the other targets that I had listed. And you can see how we took them out. We didn't quite get this one yet, but I don't doubt that we get it eventually. And then, so the way that the Browning formation was drawn was we took out this swing high, so higher high, and now we're looking to take out the swing low, lower low. So now this one would be drawn like this. And that's not to say you can't trade off of these broadening formations. You can, and let me think of a good example. Spotify. This is a great example. So you can kind of see the one that I had drawn up here. I'm just gonna move it. So I think I had this one, and then I had, it's like, I don't remember. We're just gonna go like this. Actually, not to confuse you guys, we'll just go here. So that's not to say you can't trade off of these, but the whole idea is that you're looking to take out these pivots and then get reversals. And you can see we took out the bottom of this 3. We know it's a broadening formation. Boom. That was the bottom. And then we get the 2-2 reversal all the way back up. And then we take out this high. And now we want to come and take out this low we put in. And then we do that and we get the range expansion all the way down. And then we have all of our pivots once again. That was the bottom of a 3, continued. And then we haven't made a lower low yet. But, and then also the other important thing to note is that you still want to be trading with time continuity. Even if the broadening formation says the magnitude is to go up there and take something out, you need to have time continuity, or else we can't really expect it to do that. Because if you have conflicting time frames, what the time frames tell us is who is more aggressive, the buyers or the sellers. And the reason it tells us that is because if all the time frames, let's say I think this was full time frame continuity up. I have let me pull up the study. You're just gonna have to trust me on this one. I think it was this. So these arrows tell you when there's full time frame continuity. And you can see right here, we get full time frame continuity up. So we can expect it to go and actually take that out. And it did. But if you don't have full time frame continuity up, like you can see we had it right here, and we took out that low. Actually, wait, this one doesn't, hold up. This one doesn't show the monthly. Let me think. I think this script just doesn't show the monthly, but or was this the start of the new month? Yeah, that was the start of the new month. So that's actually a good example of the fact of decoupling. I don't really want to get into that right now, but you just need to know that if you don't have time frame continuity, you can't really expect it to go and do hit all the magnitudes, because time frame continuity tells us who's more aggressive. Because if we're above the open on every single time frame, and every single time frame is green, the 60, the day, the month, and the week, then they have to be buying it, because they have to be buying it up, because the only way it can do that is if there's aggressive buyers in the market. And so yeah, that's a very important part. Time frame continuity and the broadening formations need to be going together, which that's not to say that it won't complete. You just need to have all the probabilities going with you, if that makes sense. I kind of went through that quickly. Is there anything else I should touch on, or any questions you have about anything this strat? You can just drop it into the trading chat. No question's a stupid question. How to find the pivots. All right, we'll go to SPY on the daily. So all a pivot is the low or high of a previous candle. So if you're trying to trade back through to the downside in a range, you're going to use the lows of the previous candles. So this is a pivot, 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 etc. all the way down. And you can't expect to take all of these out. You're just looking to take out, when we get this 2-2 reversal here, right here, or this is a 1 bar. When you get this here, your magnitude's only to take out this. It's not always going to come crashing all the way back through, like if you look at the monthly chart. And actually, this is a good example for anyone who doesn't know the strat, who's just kind of coming in here. So we have all these pivots all the way up, and then this is, sorry, just waiting for Bob to type. I'm completely new. All right. Well, is there anyone else that's completely new? Just throw like a emote on the Bob T's posts, like same. All right. So if you're completely new, okay, then I'm gonna explain the whole strat. So that this is gonna be a little longer. So there's three things about the strat. It's time frame continuity, the bar types, and the broadening formations. So starting with the bar types, I'm gonna remove this. There's only three types of bars that can occur, and this is insanely important. So from one bar to the next, only three things can happen. And they're labeled 1, 2, and 3. So this is a 1, and this is an inside bar, meaning that we didn't take out the low, we didn't take out the high of the previous bar. And this by definition is a consolidation. That's very important to know. This is a consolidation. The buyers and the sellers were pretty much at agreement on price. And then we have a 2. And a 2 is a candle that takes out the previous low or the previous high, because you can have a 2 up, like right here, or you can have a 2 down. And what decides if it's a 2 up or down isn't the color. It's just if we took out the low, it's a 2 down. If we took out the high, it's a 2 up. And then we have a 3 candle, which this one's kind of hard to see. We're going to move up to this one. A 3 candle. And then this is the most important one to understand. Is a 3 candle is when we take out both sides of the range. And when you take this is really important because knowing we take out both sides of the range gives us the understanding of the broadening formations because we know they occur. And so a 3 candle is taking out the high and taking out the low. And another thing to note about 3 candles is that in order for there to be a 3, it has to be a 2 first. So at one point, this was a 2 up fully green, and then it fell back in, turned red right here. And that's with time frame continuity to the downside, because if you look right here, right at the bottom, you can see we started at, this is 2020. So the yearly, the quarterly, the monthly, all opened right up here. And now we get a 2 go 3, the yearly, quarterly, monthly, weekly, daily, everything's red right here. So when this is red, you can pretty much just go short because you know that a 2 has to be a 3 first. And so yeah, hopefully hopefully those bars make sense. And then the second thing is going to be time frame continuity. And I'm going to need more than one chart to show this. So we're going to go, let's see. So let's see it. So sorry, I need to create this. So all right. So for time frame continuity, there's 4 major time frames that we use. These will change depending on volatility because if it makes sense if you think like the days like today where we're moving really, or this one today's not that volatile. If we think back to the crash, we were making moves that normally would take like years, maybe years, quarters, months in a single day. So on days like that, you want to go down time frames because then that means the hourly candle can be as big as a normal weekly candle. So you're going to want to move down time frames. But um that's once you understand the strat, that'll be something you'll have to worry about. For now, it's the hourly, the daily, the weekly, and the monthly. So why is time frame continuity important? Because in order for price to make any move, it has to have time frame continuity if it's going to be a large move. And this is what we use pretty much instead of using like moving averages and everything else, lagging indicators to gauge direction, we use the time frame continuity. And one thing to note, um, I forget those statistics. I believe it's 70% of trading is done algorithmically, and that means that 70% of the volume being traded is being done by computers. And what we know about algorithms is four things. You have to tell them what to trade. In this case, we'll say laser. You have to tell them how to trade it by taking the offer, like hitting the ask, sitting on the bid, sitting on the offer, etc. And you have to tell them when to do it. And knowing that, this is how we pick up on algorithmic trading, because when we get these new candle opens, if they're buying, it's going to be above. And if they're selling, it's going to be below. And that's kind of what creates the time frame continuity. So on laser, for example, this is, let's see, when was the month green? Right here. Yeah. All right. So we'll come down right here. So I'm going to be calling these candles green. It's just a habit. Oh, this is the week. We need the month to be green. I guess we're going to come back up over here. And when you have time frame continuity, this is kind of what it looks like when you have these huge stocks that are running because the algorithms are buying it. So when you have a green candle on all the time frames, so when you have a green month, you have a green week, you have a green day, and the 60 is green, the only thing that can be occurring is that they're buying. Because for all those to be green and above the open on every single candle, they have to be buying. That's the only thing that can be occurring. So knowing that, since we know they're buying, we want to take the reversals into the direction that they're buying it, if that makes sense. So let's say we'll go to this day right here. So on this day, we know that the day, the month, the week, and the day are green. Or the day, the week, and the month are green. So whenever the 60 is green, we want to be looking for reversals or continuations. And this is a good example. So we get the 2 up, which this by itself is a 2-1-2 reversal to the upside. And it's a reversal because we had this 2 down candle where we take out the previous low, the inside bar, which is a consolidation, and then we took out the previous high. So this is a 2 up candle. So this is something you could take long off the open, but with gappers, normally you'd want to wait for it to try and go fill the gap, but we can get into that a different time. So now we know they're buying on everything because the day, month, week, green, right off this hour. Now we get this, now we get a 2 down, or 2 up that goes red. Now we get the 2 down. This is corrective activity. We know it's corrective activity because it's not going with the direction of the larger time frames. And we know not to get short in this. So, could you please show an example of the opposite? So no time frame continuity. Let's see. Let me think. I don't know if there's a good example to use right now. So this is Tesla. And this has an inside bar as well. I can't really go back as far in the hours, so we're just going to have to use the day, the week, and the month. But we get this 2 up, and it goes red. And that was the sell-off on the daily. And then, where's the weekly? You can see the weekly is a 3. A 3 by itself is a reversal because it's a 1 bar. It's called a 1 bar rev strat if there's an inside candle before it. But 3 by itself is a reversal. So this, I believe, let's see. Yeah, so this is where you have conflict. So the year is green. And let me see when the year opened. This is if you were to be using the larger time frames, by the way. So the year opened down here and ended up here. So the year is green, and we go red right here. Since the month is red, this is something that you could take against the time frame continuity because it's the year is green, but this is like a larger time frame example. So the month goes red. This is corrective activity, and then we get the inside bar, the consolidation. So this is a 2 up still, even though it's red. and then the inside bar, and then continuation back into the time frame continuity. This is where we didn't have time continuity. And you see this chop back and forth on the weekly. That's kind of where these inside bars happen as well, if they're against the grain, meaning if they're against the time frame continuity. Let me think of another example. Boeing. Yeah, here's a good example. All right, so first of all, we'll draw the Browning formation. So you can see we have one right here in the month. And then we have one from back here previously. Oh, wait, never mind. Ooh, that looks like spaghetti. We're going to do it like this. I got it on the quarter. And as you can see, that nearly caught the bottom. So back to the monthly. So this is, we got time continuity to the downside. I'm recording this. So time frame continuity to the downside. And then this is all against time frame continuity. Because up here, the year opened, where is it? 2020. Yeah, so year red. And now this is all against time frame continuity. And then this is also what it's called mother bar problems. And that's where we have this huge bar right here. And we have all this is all a consolidation, because on a larger time frame, this is going to be a compound inside bar of all of, here, we'll just use the choppy price action to show it. This is all a compound inside bar of all of this, of just this. So this is corrective activity, and this is something you don't want to be trading. And then you'll notice, where did we start the new year? So we started the new year right here. So once again, this is all against time frame continuity. You can see how it's choppy, 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 and then you kind of get a move, and then it fakes you out. And then now we get the new year. I'm not saying that this is just gonna go straight up, but we get the new year, it flips, and now we get the 2, 2, and hopefully we're just gonna continue in the direction of time continuity. Can you zoom out on the month? I have a question. Okay, yeah. What is the question? So the last mother bar, this one right here. Up here. What about it? On the bottom top B to the previous high. This, are you talking about this one right here? The one that I drew off of. Yeah, why do you draw it there compared to the actual top? So the reason I drew it here, this was the old one, and I was just kind of showing how, because look at this. So the bottom, this is still a broadening formation on the bottom. Now we just have this range expansion all the way to the upside through this used to be the broadening formation from these two tops, and then we went expando and we had this range expansion. However you'd want me to draw it. All we have to know is that this is higher than this. And so the reason I had this one drawn is because this is the previous range, and now this one, we started a new broadening formation up here, and then this was a previous range. I just drew that kind of, it's as a visual, because you're still going to come through these old broadening formations, And this top, yeah, sure, this top isn't there anymore. This one would probably be the top of the whole branding formation. So this is our whole range now, if that makes sense. And then any other questions? Retrade patterns. How do you know if it's a bullish or bearish? Is it a good time for okay, when there's no time frame continuity, unless it's a really volatile market where like if you have the month green, but we have this huge sell-off like today, that's where time continuity doesn't really come into effect, if that makes sense, because it's the volatility is picking up. But the way you know if it's bullish or bearish is the direction it breaks. So 2, 1, 2 to the downside. That's bearish on Boeing. And what if there's no time frame continuity? Unless once again, unless you have these market conditions where it's volatile and we're just selling off in different sectors and stuff like that, um, the you'd rather trade something that has time frame continuity. Because when there's time frame continuity, these moves are normally gonna be um, better and more pronounced. Like if you look at Tesla, every time this moved largely, the all the time frames are green. One up, two down. How do you define that? So here, uh, zoom into here. So the color of the bar when defining so the color of the bar does not matter. I'll get to that in a second. HIFLVN. So what is a one up, two down, etc.? How can you define the differences? So a one is an inside bar. A two is previous high or low, and a three is you take out the both sides. Defining if it's up or down, this is an inside up, so a one up, because this is green. And then for a two down, oh, sorry, I was reading the chat. I guess that only applies to the ones and threes. So one up, two up, two up. Yes. Ones and threes are the only ones that the color, I guess, changes the direction because they're not a directional bar, so you have to go off of the colors. Yeah, that's a great chart from Akez. A one down, inside down. And then, so ones and threes are the only ones where the color defines if it's an up or down. Yeah, Ice Cube. There you go. A two up is going to be break a previous high, two down, break a previous low. You can have a two up and it can be red, and you can have a two down and it can be green. And I hope that makes sense for you guys. Just printed that. Is there anything that I didn't address? There's a lot of questions in there. Two and two, enter on the break of the high. Yes. For a 2-1-2, if we were taking this trade to the upside, this would be the entry, and then your magnitude would be to take out the high of the previous two candle. Yeah. So a three up, it'd have to be three and a three, so take out both sides, and then green. Three down is red, take out both sides. A one can't be up or down. You can call it up or down just based on the color. That's some people do it, some don't. But yes, by definition, a one it's just inside. Bar color is defined by the opening of the candle. So for time frame continuity, it's the color of the candle. For the type of candle, it's did it break the previous high or low, or both, or none? Intraday, if you're just learning how to trade the strat, 30 and 60. Yep. And that was actually, I was going to show you guys, let's see it. So this should illustrate time frame continuity pretty well for you guys. So we'll go to SPY. This is only time continuity up to the hour. And when I say this is conflict right here, because the hour was green here and then we went red. Let me explain the bar candles, the candles from the overlay first. So if you're paying attention, this huge white one that kind of creates the box, this is the hourly candle. These gray ones, how there's two in each box, these are each the half-hour candle, the 30-minute. And then these boxes right here, these are the 15-minute. And then these ones right here are the 5-minute. And then each candle is a 1-minute candle. And then this kind of shows how time frame continuity works. So this is a good example right here. So we get the two up, time frame continuity up with the hour, and I believe the day and week on SPY. And then we're two up. This hour is green right here. And then we open, we go up, and then we go red here. This is conflict because you see this is red, and then the fives were red at one point. But we have the green hour. So this is something you don't want to be touching to get reversals down into. And then we get the inside bar, which we actually do go red on this hour, but we close inside. So this is something where you have an what's it called? You have an entry off of the 30-minute. So this is the 30-minute candle that I'm highlighting. Let me draw this. This would be the entry on the 30, this pink line right here. I'm going to change it to something a little more pronounced. So this would have been the entry on a 2-2-30-minute, because as you can see, this one was two up that I'm like highlighting my mouse around. This is two up. And then we get the two down with the hour. But then we go inside. And you don't want to be trading inside bars. And the way that you kind of get around trading the inside bars is you want to be looking at the higher time frames to make sure that if this 2-2-30 happens, the hour is going to be triggered two down very close to where you enter on the 30-minute reversal. And that might sound kind of confusing, but there's an example here. So we have this inside hour shown right here. I wish I could like highlight it and point at it, but you can see this is the inside hour compared to this hour right here. And now slight break of the high. This is where you would have gotten stopped out if you took it long. And this is exactly why we use tight stops, because we know exactly what's happening. So if we go 2-1, 2 up hour, and then it doesn't go and it starts coming back through, this is something that's going to go 3 down. And just based off of the stuff I was showing previously, we knew from the broadening formation that if this went down, we would be looking to take out that other side. For anyone that came in here, I had that chart posted previously. I'm going to see if I still have it on my... Yeah. So that's the chart that I'm talking about. So goes 2 up. This is where you would have gotten stopped out. And then we get the 1 bar rev strat on the 30-minute. And then you get the 3-2 continuation off of the 30-minute. Or you can get it right when this hour goes red to the downside, because 2s can go 3. And the way it does that is first it breaks the high, and then it goes red. And then that's when you know it's most likely going to go 3, because we know that happens. Which this, we don't have time frame continuity to the downside, which will heighten the chances of a 2 going 3 if you're going in the direction of time continuity. But in this case, it happened. So, and then that's where you can see this time frame continuity, hopefully that makes sense. We were green at one point when we were over this, and then the hour, the half hour, the 15-minute, all flip, the 5-minute, all flipped red right here. And then that's where you want to take the reversals and stuff into time frame continuity, which this only shows the hour, but hopefully this can kind of like visualize it a bit better. That sounded, in my head it sounds less confusing, but anything that I need to clarify, just let me know. Or any other questions? Thoughts on mother bars? Mother bars, I'd rather just not trade them. Like you can, so I think what, let's see. So you can obviously, you can still take these reversals and continuations. This is a huge mother bar on Boeing. And for anyone that just got here, a mother bar is just this whole bar. These candles, this is all a compound inside bar of this bar. So you can still take these. It's just going to be a lot choppier, and as you can see, it's going to be more sideways because this is still inside of this previous range right here. So you can take them like when you're trading longer time frames, like what? Here's CCL. Like if you were trying to get the bottom on CCL, totally you could take it and just enter off of the bottom on a reversal from this broadening formation. But you have to understand you're going to get chopped to hell in here because this is pretty much all of inside of this still. It's not doing much. And we want to be trading things that are moving. Hopefully that explanation made some sense. Yeah, some people, they'll say like this is a pivot machine gun. Thank you. Yes, we like long red and green bars. Exactly. They tend to get redder and greener, don't they? And for anyone that this explanation that I'm giving right now doesn't make sense, Rob has tons of videos. They're linked in resources. There's tons of videos he's made, and sorry, I cut myself off. There's a ton of videos that he's made, and also interviews and stuff with people asking him questions about it that hopefully answer your questions more. Main time frames for scalping versus swinging. So scalping, I'm guessing you're referring to like day trading. I don't go lower than the 5-minute personally, but like that one chart I just showed you, I will use that. I'll use that for day trading when I want to make sure that I'm trading in the right direction. Because as you can see right here, so if this is the 5-minute candle, we go 2 up. So this is a rev strat. We got this inside bar, and then the 2 up, and then the 2 down. You can take this 5er because here, this is the 30-minute, and then this is the hour. So this is the reversal on the 5er, and you get this 2-2 reversal into a red hour, and then you trigger the 30-minute down, and then you trigger the hour right after that. Okay, so, and then also, yeah, this is something you guys need to know. So if you're on Thinkorswim, not sure how to do it on other time frames, but you go to settings on your chart. I don't think it's actually going to show up. Let me, you guys might get disconnected from the stream. So share my screen. Sorry, just give me a second. All right. So if you're on Thinkorswim, this is what we do. We trade the bottom of the hour, meaning our candles update at 9:30, 10:30, 11:30, 12:30, etc. Because this gives us all the different opens in order to know what the market participants are doing by price and time, which is what the time frame continuity is used for. So on Thinkorswim, you're going to want to go to settings. And then whatever you're trading, normally we're trading equities. So turn off extended hours and then turn on start aggregations at market open. And then that will be the correct time frames for what we use when trading the strat. Think of some for each. Yeah. I direct anyone with questions that are outside of the U.S. to Ice Cube. Mind the flip, yes, that is also a great thing. I'm actually gonna copy the link and post it in resources. Yes, the session was recorded. Does anyone else have any other questions? The strat. So the only time I ever use any extended hours is on the futures when I'm drawing the tries in the morning. That's literally it. Room is booming. Yeah, I know. It's the Neo trade on Twitter, Ice Cube. That's why. But I guess the more people I can teach, the better. Because Rob only has so much time, and I don't know if you're a new trader. Normally, you don't have enough money to just fork it out and like leap of faith, I guess. So Bob T, the way to get around that is either you can just trade the futures candles if you'd like, or you can have SPY open on a different chart, which that's actually what I'm going to be doing. I'm opening a futures trading account, and I'm just going to have this up, and I'm going to use this in order to create my trades on the futures. Or once again, if you're trading futures, I don't know if you're not on Thinkorswim, I guess just turn off extended hours and hopefully it'll update at the bottom of the hour, but you can do the same thing on futures. Start at market open, and then this is the correct candles. When things occur matters, yes. Okay, so we don't say support and resistance, and the reason we don't is let me go back to a different chart. So you said Piton. So if we go up to the daily. So people they'll be like, okay, this is also like an explanation of how the broadening formations work. So they're gonna be like, okay, this is support. If this breaks, this isn't support. And very, very rarely is it ever gonna just go down and touch it. So like this is a good example right here. So we took out all the pivots and then we took out this one. When people have their stop set here and you get this huge influx of sell orders all the way through here, from their stop orders, because if they're long, this is where their stops are going to be. Or if someone gets short, obviously. So they're like, okay, support broke, get short, and then all the longs get stopped out, sell straight through it, and then there's nothing above for the whenever someone comes in to buy, because everyone just sold. They're all short. So now when it starts coming up, right above this candle right here, anyone that got short right at the peak of support in quotes, anyone who got short right above this candle, they're all getting squeezed. And you can see that. You get this huge reaction straight off of it. And that's why we trade it like this, because normal TA uses support and resistance, but 90% of people that trade using normal technical analysis, they lose. So obviously it's not right, or at least it doesn't have much right. If 90% of people lose when using it. So this is a break of support, but that's the bottom, the short-term bottom. Always think about the other side, shorts are trapped. That's exactly, that's the way I think about the strat, is exactly in those terms, because a 2-2 reversal, in the essence of what a 2-2 reversal is anyone who got short in this candle, boom, everyone short here, they have to be buyers now because they're underwater. And then anyone short from this candle, underwater, this candle, underwater, boom, 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 all the way up. And then eventually it's going to run out of steam because there's no one short. And then that's why you want to be trading through previous range. And the best example of that is if you pull up the SPY chart, you go up to the yearly, or not the yearly, the monthly. You can see slow grind after we get over this previous high. Or this would be a better example, but we're going through into new highs because the only thing fueling this going into new highs is buyers bidding it up. There's no shorts to get stopped out. Gus, the recordings, I'm probably going to be posting this on YouTube and linking it in, I think I have a channel called Alex's Options YouTube under Learning the Strat. But you want to be trading through previous range because when there's no shorts to take out and no stops to take out, the buyers have to just step up and be aggressive and get it up there. And that's why you see when you get this red candles, they're going to be a lot bigger. And then you get the green ones back through, they're going to be a lot bigger. And then they get tiny, 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 tiny. Boom, huge red candles. And then huge green candles. And then we go into new highs. And right here, we had the 1 bar rev strat, 3 inside the 3-1. And then we had the 3-1-2. Rip all the way up through here. And then grind, 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 grind. And that's why you always want to be trading through a previous range. And a good example of that today would be with time continuity as well. We're actually, oh crap. We're actually going to go through this right now. If that's fine with everyone, we're going to, what the Neo trade was and all of the ads and entries and targets and how it all worked out. Absolutely. All right. So first thing, I'm going to be drawing, this is, the dotted lines are going to be the higher time frame ones. And this is another thing in the strat, you want to be trading in force. And what that means is this is only a 2-2 reversal under 41.66. Like if this candle hasn't closed. Look at obvious pivots, that's where stops are taking out. More fields of fire. Exactly. So this 2-2 reversal on the monthly, or actually, yeah, so 2-2 and then 2-2 continuation on the monthly. It's only enforced under 41.66. So over 41.66, if we have this huge wick down here, we're coming back through previous range if this isn't in force anymore. So we know not to go short that until we're coming back out of it. But I digress. So that month under here, that month is a 2-2 in force. A continuation in force. And it's time frame continuity. Month is red. Then this week, the entry on the week was down here at this green one. This green line, the 2-2 week. So this was a 2 up. So inside bar, 2 up, 2 down. We want to go outside bar of this because we take out both sides of the range. And then let me see if I can delete this. Gosh, can't really click it. Okay. But we take out both sides of range. So we take out this and we start coming back through. Now we're looking to go and take out this, which we haven't done it yet, but we'll see. So now to the daily. You see how it dumped? This is time continuity all the way down. Daily, week, the monthly, weekly, daily, everything completely red, and we're in force because the weekly goes in force right here. And you can see, we know for sure they're selling, and we knew that right up here at 40 bucks. We know for sure everyone's hitting the bid. And someone might be like, oh, well, I have support right here. Why would that be support if everyone is hitting the bid? All the algorithms, all the people, all the market participants, they're all hitting the bid on every single time frame. We know for a fact they're selling. You don't want to be buying into that. And something, I forget who said it earlier, but they're like, everything's at the bottom of Browning formations right now. Yeah, look at the date. We only have, this week is the end of the month. Now next week we get a new monthly candle. And if that monthly candle flips green, that's the bottom of the Browning formation, so that's most likely going to be the bottom because we have time continuity back up off of the bottom of the longer term Browning formation. And that's where all the openings, you need to make sure you know about them. So pivot 3490, 3190. Yeah. I'll actually draw that. So the magnitude on the week is to take out this, and that's because we made the new high. Would those be reversal areas? If we get the monthly green and start coming back through, then sure, yeah. But the thing is, if you look at the month, is it going to be an inside month? If we go green way down here next month, most likely it's going to be an inside month. Unless it takes out the low and starts coming back through. Then that could be a 2 down goes 3 up on the month. Well, we can get into that once that happens. We'll talk about the monthlies. So back to what I was talking about. So right under this level right here, we know the monthly is in force. And then under this level right here, we know the week and the day are going to be red if we open above it and come through it. So that's time frame continuity to the downside, month, week, day. And this is the 2-2 week back through the range. So we know to enter right here. And then this is the inside hour. And this is by definition a consolidation. And it's something we know about from that chart posted previously that shows all the reversals. Maybe I can get it again. Let's see. There's a more condensed one that I want to find. Yeah, not sure if I can find it. If someone can find the one that just shows the reversals, that'd be awesome. It's posted under my Twitter hashtag the strat candles. But anyways, inside bar, 2-1-2 continuation, add to your position right here because we entered here, no reversal against us on the hourly. Strat pivots, awesome. Barely, could you post that into scripts and scans? That'd be perfect. So 2-2 week right here, entry. We entered like one contract or small position size just to kind of test the waters. Boom, goes for it. Hit the first target, which these targets, again, these are based off of the hourly. And you can see this pivot wasn't taken out until right here. This one wasn't taken out until right here, etc. I just use it to kind of target the intraday ones because I normally don't swing. But anyways, 2-2 week entry right here, test the waters with a couple of contracts, boom, straight down. Now we get the inside bar, consolidation, and then we get the 2-1-2 right here back into time frame continuity. This was against time frame continuity. See how it didn't do much? You don't want to be trading that, and it's inside. How is this bar not going to be inside of this bar if it's going up? So you don't want to touch that at all. And then boom, straight back into time continuity. See how this hour opened right at 10:30? They started selling. That is what time frame continuity does, and that's why we call it the flip. Because when the bottom of the hour happens, we get that flip, we know if the algorithms are buying or not based on which color this candle goes. And you can see when they're aggressively selling, that's the top, that's the top, that's the top. Very, very tiny wicks. They're all hitting the bid, and we know that for a fact because they have to be. If we have the condition of full time frame continuity to the downside, they all have to be hitting the bid aggressively. So I digress, but 2-1-2, this is your inside hour down. You add to your position right here. And then if we get on to the 30-minute, I believe there's another entry. And this is where the time frames kind of go up together. So you see we get this 2 up, inside bar, 2 up, boom, 2 down. 30 minute, that 2 down 30 minute triggers the 2 down hour. So you could have added here and added here if you felt like it, because those are both valid reversals or continuations into time frame continuity. And then these, by the way, I alerted all of these in the room the whole day or on my Twitter. I think I alerted the inside hour on Twitter. But anyways, now we get this inside 30 minute. So they're selling, 30 minute opens, boom, they stopped. Consolidation, boom. 2, 1, 2 on the 30 minute, add right here. And then 2 down, 2 up. This is corrective activity. It's against time frame continuity. And then look at this. Come down to the fiver. Right here. So we had this inside 30 down, and then we had this inside fiver, and it's a shooter candle, which means it traded up here, boom. So it opened, traded all the way up here, comes down, goes red right here. Anyone that traded long up here completely stuck long. So once this candle closes right here, they all have to be selling, because if they got long, they're all underwater. It's kind of like the psychology of the candlesticks, if that makes sense. So you get the inside and then 2 down. So that's the fiver, add to it. Then pulls back up, and we kind of just fade the rest of the day. And you can see that was an inside hour, and then 2 down, hammer. And then nearly hit this target. We still have this weekly magnitude at 34.9 to go compound outside bar. And just to kind of get in your head, 2 up, we start coming back through. Outside bars exist, we know that. If this breaks this low, compound outside bar, and that's why this is our target, because that's a broadening formation. And we also know exactly what this is. Let me I'm gonna try and pull this up. Oops. All right, so let me see if I can get there we go. So this is an example. Because this is all that can happen in the market. This is literally the only thing. The market cannot trade outside of these. Let me throw it into this is gonna be in resources. I'll throw it in the trade chat for anyone who wants to open it and look at it if the resolution's bad. But this is all that can happen in the market. And what I just showed you, where it goes inside, 2 up, 2 down, rev strat 1 2 2 bearish. Inside bar, 2 up, entry, target is going to be to go outside bar, which we didn't. The reason that's the target on this is because we took out the high here. We're coming back through, we want to take out the low here. But if you look at this, we didn't take out the high of this bar. So we can't expect it to go and take out this low. Our magnitude would just be go outside bar of this inside bar. Yeah, there you go. Strat combo, strat cheat sheet. Perfect. Yeah, but hopefully all of that kind of clicked, or at least made some type of sense. Is there any other questions or concerns? Yeah, if you think that's good, I suggest if you head over to resources, there's going to be videos linked of Rob, the guy who created this strategy. He's going to be explaining it. And he's explained it many, many times over the past 10, 15 years, so he knows what he's talking about. You want to study charts next? Yeah. The best thing I suggest you guys doing is going through the charts, looking at all of it, and the first thing you're going to want to do is you're going to want to have all the time frames open. So the hourly, the daily, weekly, monthly. Listening over and over. If you want to listen over and over, Rob has hundreds of hours of interviews and explanations on YouTube. And if you want to learn how to draw the broadening formations, pull up YouTube quick. He has an epic poem where he goes through all of the stocks in the stock market and draws every single broadening formation on the charts. I can just link that search down here for anyone who wants it. Yeah, there you go. So those are all stratters that Ice Cube just linked. Rob is the creator. Sarah is someone that Rob taught. Yeah, the whole idea of the strat is the fact that it has to trade like this, and there's no biases, and there's no I forget what it's called. Ice Cube. I don't know if is Ice Cube in here. Can you hear me? Yeah, Ice Cube. What's it called? I just can't. The word's not coming to me. It's objective. Like, well, it's like it's an objective way of looking at the chart. There's no biases and there's no um guesswork. I forget. There's a word for it that Rob said before. I just can't really remember it. Aggregation. No. Oh yeah, another thing. Just kind of a technicality, I guess you could say. Price doesn't move; it aggregates. What do I mean when I say that? I mean exactly what I was explaining before. In order for price to move up or down, the buyers and the sellers they have to be more aggressive. When people say it's moving, it kind of gives a false idea of what price is doing. So in order for price to go up, the buyers have to be more aggressive and they have to be taking the offer. And in order for it to go down, the sellers have to be more aggressive and they have to be hitting the bid. So all you're looking at here is this is aggressive buyers, aggressive sellers, aggressive buyers, seller, exact, like all the way through here. You're not looking at price moving, you're looking at the aggression of the market participants. Entries and exits, yeah. And another thing, I kind of touched on it a second ago. When you take these entries, you have really tight stops because, um, let's see, where's the so so let's say this is a good example. So the 1-3. So a 3, in order to go 3, has to go 2 down or 2 up first. And we know price takes out both sides of the range. So let's say we entered on this inside bar that goes 2 down and it starts going back up. We know exactly what it's trying to do because a 2 down has to come before a 3, if that makes sense. So that'd be a 1 bar rev strat where it goes back to the upside and turns 3. So if this were to go green after you enter this, that's when you're like, okay, I'm out of my short because you know exactly where it's going. And so every entry we take with the strat is the break of a previous pivot. So if we break that and start coming back through, that's trying to go compound outside bar or outside bar on a smaller time frame. So that's you don't want to be a part of that. We know exactly what's happening. And I hope that makes sense. But yeah, I think in Rob's room, he only the highest stops he'll do is like $1 on like Tesla. And when there's like hammer candles and stuff, they use like penny stops because if it's a hammer candle, it should just keep going. On average, I'll use like 20-cent stops ish, 20 to 30. Because I always say it, it's in the, where is it? It's in announcements. Let's see. Yeah, nothing's ever guaranteed. Keep your stops tight and therefore your loss is small. Don't hold on to losers. Reentry is always an option. Your contract value or your stock going back to $1 from a penny is not always an option. I kind of butchered that, but how about on stops on futures? Um, yeah, I didn't stay in Neil that long either. I think I got 180%, and I just grabbed a couple of like the 35 calls at the open pretty much. Yes, you can take the same trigger because like I said before, this 212 is only in force under 380 3887. So if we get onto the 1 minute, let's say this was the entry right here. It was a little lower, but just for example's sake. So let's say this was the entry, boom, rejected, comes back up. If you get an entry back down into it, like I bet it'd be like a 15-minute or something. Let's see. Nope. Fiver. Yeah. Inside bar goes 2 down. And then we get this inside bar where you get stopped out. And then boom, entry. This is still... Oh, wait. I was looking at the wrong one. Oopsies. Or was I? No, I think this was right. So let's say you get stopped out because this candle goes up and inside. You just enter 212 still. This is on the 5 minute, getting back into the same trade. So you can still use the same trade because it's still active. Add to your winners, trade small practice, small entry, often 2 to 3 ads are realistic. Exactly. That's the beauty in the strat, because when you get a winner and it's working for you and you get this like reversal against you and you can add to it, why would you not add to it? It's following exactly what your strategy wants it. Add. Yes. It's like you entered and it's winning and it's following your strategy exactly to a T. Why would you not add to the winner? That's just a chance to make even more money. And like, let's say you want to scale out. Perfect. You get a TTO against you. Let's say you're up 100%, sell half. Now you're just playing with the house money. Cut it when a reversal against you. There you go. Like for my I guess for my my risk tolerance, I wouldn't have I don't know if I would have held through this inside hour, depending on like if I was up like 300% or something down here. I would have just sold out and looked for the re-entry instead of letting it go against me and kill my premium, if that makes sense. Because you can always re-enter, but if this goes from 300% to 50%, that's on me. Soon you'll see broadening formations everywhere. Yeah. Because in order for price to move, it has to make these broadening formations. And that's something some people don't think is true and others do. Don't give me too much credit. I learned this, I didn't make it. Is there any other questions you guys had? How long did it take you? I've been trading it for 7 months I think it's 7 months like soon. I don't have an exact date, but just about that. I I pick up things really quickly when I'm yeah, I pick up things really quickly when I'm actually like interested in it. That's the ADD side of me, because if it's interesting, I would go through and I'd do these charts every single night, and the candles, I'd practice trading. Need to drop all the tea. Exactly, Ice Cube. It does not take long at all. The first thing I suggest is taking all your indicators off your charts and only having the numbers. I'm getting a call, so give me a second. That was actually a Ninja Trader calling for me opening my futures account. That's awesome. I'd say the best thing about the strat, because I know a lot of people who are just getting into trading, especially new traders here, or people who are just doing it as a hobby. If you're trading weekly signals, those last the whole week. So you can just do your swing trades. You know what candles to look for and reversal setups to look for. So you can just set those up the night before on Sunday night, and you can set all of your take profits, whatever you want, and you could just set alerts to go look at the chart, and it can all be done for you because it's all very concrete. Like a good example of that is Baidu. So obviously time frame continuity. 2 up, 2 down, 2 up week, and then you get 2 up goes 3 down. You'd be out right here if you were trading it like that. I used trailing stops on a fan stopped out when I shouldn't have. All right, so before I log off, is there anything else that I should be addressing? How often? I pretty much just do them whenever there's like a question where I could just explain it to a ton of people. It's helpful for me and everyone else. The more I explain it, the more concrete it's like in my mind, if that makes sense. So I don't really hate doing this. It doesn't take too long and beneficial for everyone. The recording, I will be putting it on my YouTube, and I will post it into, it's called Alex's Options YouTube. I don't know if it's private or not. Yeah, you should be able to view that channel. Watch list, yeah, I will be posting stuff for tomorrow, along with, there's a lot of other people that post stuff. So I post my stuff in Alex's charts, and then everyone else can post in charts. I'd say try and keep the messaging in charts like to a minimum, just so we can just hopefully have as many charts in there and less chat. My name's also Alex. Yeah, common name. Is it Alexander or is it Alex? Because I'm just Alex. Just Alex. Oh shit, that's the first one I've found. Well, yep. Yeah, exactly. Exactly what Tim said. So setups for tomorrow are going to be kind of far and few between because the market all dumped today, so everything's pretty much going to be 2 down. So tomorrow, most likely, we're going to be looking for things that are time continuity down and decent options prices. So I don't know how many setups I'm going to be able to find on the daily, but we'll see. Inside days, yeah, there's some inside days today for sure. But SPY at the end of the day kind of ruined that. Unless, is it? Oh, SPY is still inside week. That's perfect. And if we take that down, here's our magnitude on the weekly. And then daily, that's the trigger. And that's all we have. All right, well, I'm going to end the recording.